Hello, I'm Ivan Gruhl, Co-Chief Investment Officer with Avantax. Today we'll provide a market update for April. We'll start with a recap of returns for March and then shift to an update on the economy, earnings, and our outlook going forward. The month of March proved challenging for investors as most stocks around the world moved lower. Over the course of March, the S&P 500 fell by more than 5%, while the Russell 2000 Small Cap Index fell by nearly 7%. International developed markets continued to outperform their U.S. counterparts, falling just 0.3% during the month. Emerging market stocks managed a positive return for March, as the EM index added 0.7% in total return. Through the first quarter of 2025, international markets have outpaced their U.S. counterparts by more than 11% in total return, and value stocks have meaningfully outperformed growth stocks, which is a welcome sign for diversified portfolios who had seen these areas of the market underperform for the past couple of years. In the fixed income markets, falling interest rates have led to positive returns for taxable bond investors, as investors flock to the safety of U.S. Treasuries. After trading as high as 4.65% in mid-February, the yield on the 10-year Treasury note finished the month at about 4.16. So far this year, the taxable bond index is higher by about 2.8%, while the municipal bond index is lower by about 0.2%, as spreads within the municipal bond market have widened significantly over the month of March. On the economic front, the data has been showing signs of slowing, and ongoing policy uncertainty alongside government spending cuts and layoffs could lead to further weakness. In March, the Federal Reserve released a summary of economic projections, moderating their expectations for economic growth and employment in the year ahead, while raising their outlook on inflation. This means that the market's current expectations, shown in this slide, for as many as 325 basis point rate cuts by year-end, could be a bit optimistic if inflation does remain elevated. The surge in imports in response to potential tariffs has weighed on the growth outlook, as the Atlanta Fed's GDP Now model forecasts negative real GDP growth of minus 1.4% in the quarter, after adjusting for gold imports. Fortunately, the labor market continues to look healthy, and the U.S. consumer will continue to do the heavy lifting for the economy. The Federal Reserve will be watching the labor market very closely as they look to navigate the growing uncertainty from fiscal policy, tariffs, deregulation, and immigration. As the economic outlook remains ripe with uncertainty, the month of April will usher in the start of first quarter earnings season. The markets will get the chance to gather key insights from the world's largest companies and assess the state of corporate profits, which are the primary driver of long-term stock market returns. So far this year, we've seen earnings expectations moderate, but analysts still expect S&P 500 companies to post impressive earnings growth in the weeks ahead. And as this slide shows, this would mark the 7th consecutive quarter of earnings growth. Looking ahead, we believe that investors should brace for further volatility in the months ahead. We continue to stress the merits of diversification and the importance of working with your financial professional to ensure your asset allocation is aligned with your goals, objectives, and individual risk tolerance. During periods of elevated volatility and uncertainty, there is always the temptation to time the market or to keep your portfolio in cash. We remind you that this is rarely a winning strategy. As illustrated in this final chart, an investor who missed the market's 10 best days over the past 30 years would have seen their returns cut by more than half. So it is important to remember that the best days in the market often cluster around the worst days, and missing just a handful of these days can be costly for long-term investors. So that's what we have for this month. Thank you all for watching and have a great day.